Hello. Welcome back to the channel for another great video. Man, I hope you guys are really ready. You already know how I rock. If you've been watching the channel for a while now, I like to give out really good game and really good insights. Welcome to the mind of a trader. In front of me, I have the SPY, and on the side, I have the TLT market. Okay, this is the 20+ year treasury bond market. I use this as a gauge to whether I need to buy calls or puts on SPY. All right, calls represent upward movement. Okay, and this just means that we want to bet that the market will go to the upside. Okay, also it helps me with puts, and I want to know whether or not the market is going up or down. Okay, so the TLT bond market, if this goes up, SPY goes down, and if it goes down, the SPY goes up. Okay, I wanted to get that clear just in case for the new viewers who are watching, the newbies. All right, I trade options, right? Options, calls and puts. Okay, call meaning I want to bet to the upside. Price moves up, watch my cursor, price moves up, that means I would purchase a call. And when price drops to the downside, right, I want to purchase puts. Yes, you can make money when the market falls. All right, and there's a correlation between SPY and the TLT bond market. Let me explain that. All right, this is the SPY, the Standard & Poor's 500 ETF Trust. All right, and here is the ETF for the 20+ year treasury bond market. All right, at the cursor you can see here. Okay, the TLT is like a safe haven when there's uncertainty and people don't want to risk their money to invest. They run to the TLT market as the SPY falls down. Right, inflation is dealing with inflation and interest rates. Okay, and so like I said before, this TLT market is one of the things that I use to trade with an edge, right? An edge, a high probability edge, understanding interest rates. I'm telling you right now, anybody who's listening, you, yes, you, if you hear me, your trading will be different from this point on if you start using the TLT to gauge whether the SPY is going to go up or down. This is a safe haven, all right, when there's uncertainty in the market. Okay, again, when the TLT goes down, SPY goes up. All right, I'm on a 1 minute chart. We're going to switch to a 15-minute chart, still here on the TLT market. Okay, and this is what I have. Okay, we are inside of a parallel channel range. This green line creates a parallel channel. Nothing really hard about that. And as you can see, we have these swings, these bounces. Okay, all right, SPY is going to follow suit. Okay, and if they're not following suit, then it's called contango and or backwardation. Again, contango or backwardation will be the times where the up and down correlation for the two, SPY and TLT, doesn't work. And at that point, don't trade, stay away. All right, so again, TLT market goes down, SPY goes up, and we have been going down for the majority of the day. I traded a little bit earlier on SPY with some folks in the chat. And here is the SPY. Okay, now if you don't know, I want to quickly go over this before we continue this lesson. All right, I want to talk about gaps in market structure. Okay, all right, so here's an uptrend. All right, uptrend, you see a ladder step up. Okay, a ladder step up. All right, pay attention to the cursor. All right, we have upward momentum, which is bullish structure. Okay, why is that? Because we have a created bottom, okay, pivot point. We move from this level, we go up, we reject, we come back down. All right, but we do not get past this point and fall back below here. We don't fall back below here. Okay, instead we continue up. So we created a higher low because this is a low. Pay attention to the cursor. This is a low, and this low is higher than this low right here. Okay, and so we continue to make these patterns, higher lows, all right, and higher highs. Bear with me as I navigate this screen. Okay, all right, so this top right here, this is a high, right? We went down, we didn't go back like I said before, and we created a higher high. Pay attention to the cursor. Why? Because this high is higher than this high. All right. Now that's upward pressure. All right. Downward pressure would be this. Bearish momentum. Okay. And I want to move quickly because price action is happening right now, live. And I want to predict price for you the way I always do. All right. Welcome to the mind of a trader. This is a downtrend. It's the opposite from an uptrend, which has higher highs. See my cursor? And higher lows, pivot points. This one has lower highs. See? Downward step. And lower lows. All right. And what do you have here in front of you on the SPY? Okay. You actually have, let's go here and make sure that the screen is clear. All right. All right. I want to actually take off all of these now. Take off all of the drawings. All right. Right now we have, do you see that? Do you see higher highs? Higher lows. Okay, we have higher lows. All right, and we have higher highs as of now. Okay, as of now. All right, but trend could be broken in an easy fashion. Trend could be broken in an easy fashion. All right, it is 2:15. All right, today is what they call quadruple witching day on March 21st. It's when contracts expire. I'll briefly give you a description of that, and you can look this up or ChatGPT, anything that I've said thus far. But quadruple witching is when most of the major indices, right, like commodities, futures market, the options market, the forex market, a lot of contracts expire, and hedge fund managers and institutions who have big positions, they are liquidating and or adding. So they're closing positions and repositioning based on the market. Okay, they might have been in profit for the past 3 months, or they might have been losing for the past 3 months. Who knows? We just watch market structure and price action, which is what I kind of gave you. Okay, and this happens 4 times a year. All right, so dealing with options, I trade options. Options give me the right to sell or buy 100 shares of a stock without owning it. All right, I don't have to own it like owning shares, like a piece of the pie of a company. And so the more shares I buy of a company, I actually own those shares and I can collect dividends and distribution payments. But options, you have the unique ability to participate in the up movement or down movement in a stock. All right, controlling the shares, but you don't own the shares. And we deal with expiration dates. Expiration dates give us a buffer. For example, it is March 21st, 2025. I can go in something called the option chain and I can buy 2026 next year, March 21st. All right, future forward trading. I can go and say, I want to hold this trade up to the next year because I suspect the market will go up. Okay. And so again, let me recap what options are. All right. And I'll make a video for this or explain further. Just leave a comment below. Let me know, guys. We're a family. We're a team. Side note, I do have a Discord, right? Right down in the link below, there's a Discord, okay? And I have a book that I wrote for people like you, if you're a newbie, beginner, or advanced, all right? The book is called The Power of Patience, okay? And I wrote this book so that people could get an idea in the mind of a trader on what it really takes, okay? Unique Publishing Group, okay, my company, and this is my book, all right? It's like an options trading Bible, The Power of Patience, mastering emotions in trading by turning discipline into income. Okay, let's go back to the chart, all right? Options, all right? Expiration dates. I deal with those to give me a buffer, all right? And we deal with contracts, all right? Premiums, just like insurance policies for a car. When you go get insurance for a car, don't they give you an option to pay 6 months up a premium? They do, right? All right, to pay in the future. It's the same thing with what I do with options. And we deal with contracts. Each contract represents 100 shares. So if I have enough money, I can buy as many contracts as I want for SPY, Tesla, Nvidia, Amazon, any of these Magnificent 7 companies I could buy. All right. So 100 shares for each contract. So if I buy 2 contracts, I have the right to buy or sell 200 shares. If I have 3 contracts, I have the right to buy or sell 300 shares of the underlying stock. So we're dealing with expiration dates, right, to give us a buffer for the price to go to where we need to. Always, always, always have sufficient time on your contracts, all right? And I also want to make sure that I am looking at technical analysis to make sure that I get in at the right position, okay? So that's what options are. It gives me the right to buy or sell a stock without having to own it, but I can participate in the up or down movement. And if you're new and you're listening in, okay, yes, you can make money on a stock when it falls. It's called a put option, as I stated before. So now that we have that established, we talked about quadruple witching, okay? We talked about the bond market, the TLT market, okay? This right here, which is a market eternal, a safe haven. Again, when people are uncertain about the market and inflation and recession fears and interest rates are not to their liking, they rush to the TLT market to buy. If you're listening, again, this will be one of the best things you've ever heard to help you in your trading if you're trading SPY. All right, so back to SPY. Remember, we are live. We are live and it is 2:20, okay? Now, I want to talk about something quickly before we get into this price action and what I think is going to happen. All right, there are gaps all over the market, okay? There are gaps, okay? And today around 3:50 p.m., Monday through Friday, this never changes. Grab you a pen or a pencil, pause the video, come back, all right? I'll give you a little couple of seconds. We're going to be talking about how, why, what's happening on these days, okay? So, every day, Monday through Friday, when the market is open, at 3:30 p.m., there's something called the Commitment of Traders Report, the COT report, Commitment of Traders Report. And this report gives out big buys and big sells from institutions. Call them non-commercials, commercials, and retailers, okay? Once you get this data, it's aggregated, and it tells you who's buying what. Are they adding to their SPY positions like this, or are they letting go of their positions? All right, this happens at 3:50. Forgive me, guys. At 3:50 p.m. Monday through Friday, every day. There's something called market imbalances. Forgive me. Market imbalances come out at 3:50. Right now it's 2:21 today. All right. At the time of this recording, there will be market imbalances that comes out at the end of the day at 3:50 Monday through Friday. This lets you know if there's big buys in Apple or big buys in Nvidia or big sales in Tesla and big sales in Amazon. Okay. Those are market imbalances. However, on Friday at 3:30, like today, within another hour, there's going to be something called the Commitment of Traders Report. And the Commitment of Traders Report is going to give you big buys and big sells from big institutions or hedge fund managers, right? They are titled non-commercial, commercial, and retail. And you get to see if they're offloading positions from last week. Because remember, if 3:30 Friday, every Friday, this report is released, then a report was released last week, okay? And the report stated that there were big buys. I bought calls in the market and we profited. Me and a couple of students in the Discord. Okay. Don't forget to like and subscribe to the channel if you found this video helpful thus far. All right. And so today that number is going to come out again today at 3:30. And I will be watching this number. Okay. Again, it's called the COT report. COT stands for Commitment of Traders. All right. So I wanted to establish that. All right. And most of the time, it causes volatility. Market imbalances at 3:50 and the CLT report at 3:30. There are people watching this number, okay? And today is quadruple witching day when contracts expire, as I mentioned before. And so you have all these things happening. So let's get straight to it. Right now, you have SPY falling, okay? Now I see gaps to the downside, okay? There's gaps to the downside, all right? All right. Right now we are falling below the 21. Okay, here we go. This gray line, right, represents the 21 EMA, exponential moving average. I use this as a trigger for calls or puts to bet to the upside. See above the gray line, I want to buy above. This gives me a probability edge. I like the edge, all right? I like the probability. And below it, right, on market structure, I want to sell the market to the downside below it, all right? And right now we are below it, okay? It's 224. And what is the bond market doing? On the 15-minute time frame, we are finding a base. All right, let's go to the SPY. All right, and we want to go to the 15-minute time frame. All right, and what do we see here? Okay, remember the TLT goes up, SPY goes down. All right. All right, now I predict that price wants to fall back to 561.87. Let's go ahead and put a horizontal line here. Okay. All right, this could be a place of support, and or it could be the decision point for people who bought calls down here that are already in profit. They bought calls here, meaning betting to the upside. All right. For all my advanced traders, forgive me for talking like you're a beginner. I just have to remember that there are unique viewers that come to this channel, and I just want to be clear about what I'm talking about. If you have any questions below, anything you want to know, please comment, feel free. All right. And I will be glad to answer any questions for you to help you further your trading career. Okay. Because we want to find consistency. All right. Now, people who bought here, they're in profit and they could be taking their profit. Okay. All right. Here's a yellow line. Price is dropping. We are on a 15-minute time frame. A couple of seconds ago, I said I'm looking for price to fall here. All right. If we bounce here, I want to look to buy calls. If we fall below, then we want to fill this gap. All right. Now here's a gap here. All right. Here's a gap. And I want to watch the bond market to see if we have upside. This will further convict me on the move down here. Okay. So this is a gap. All right. All right, we're gonna put a gap right here. All right, gaps. What are gaps in the market? Gaps in the market, right, and price action create what they call imbalances. Imbalances in the market create volatility and vacuums. All right, price gets sucked back into these. You could actually see here, and we want to use 3 candles. Let's use 3 candles. All right, for instance, there's 1 candle. Okay, all right, and we have a small wick. All right, we have a small wick. All right, okay, and then we have another candle that gets created. All right, and then there's no wick, and then we have another candle with a wick right here. Bear with me. Remember the price action right here, looking for a bounce or a fall here. All right, and market moves quick, so I'm trying to make this quick for you guys. All right, there's a wick, and there is your body. All right, now in between here, right, in between there, all right, I'm gonna throw the volume profile on price action. I want to see a red line pop up. All right, red line is here, point of control 562.82. We are rejecting from that area. This is called the point of control. Just a reminder, this is the mind of a trader. All right, I'm gonna make this a red line. I will talk about the point of control and volume control in a later video. All right, if you definitely especially want to hear about that, leave a comment below. Helps with the algorithm, helps with me knowing what you guys want, and so I want to give you what you guys need and want, because I know I'm bringing new information for those who don't know. All right, so back to the lesson at hand. Right in between here is a gap. Okay, there's a gap that makes an imbalance. All right, now I talk about auction theory. The market is an auction. It's a casino. We're dealing with buyers and sellers. Okay, all right, think about going to a basketball game or football game, all right, or soccer, whatever sport you want to play. There's a referee in the middle, and no matter if the LA Lakers or the Memphis Grizzlies win or lose, the referee always gets paid. That's his job. Okay, so we want to trade like the market makers. All right, so there's an imbalance here, and the job for the market makers is to create balance. Okay, and so that's what the market is looking for. And any inefficiencies and discrepancies in the market is what I specialize in. It's called precision trading, momentum trading. Okay, and this is what I use. Now you see that this is in between here is a gap, right? That wick, all right, that wick stops here and that wick stops here. In between that means there were no buyers and sellers at that moment. No buyers and sellers. All right, it's a market efficiency. All right, and we want balance in the market. The way you get balance is by buyers and sellers agreeing. All right, and then what happens is you get order flow, and we get to flow to the upside. All right, this is just chop. Okay, inside of a bigger range. Okay, this is a bigger range here inside of a range. All right, chop area where people scalp. Okay, there's no clear direction. Okay, this is not like the market structure we talked about earlier when I said higher highs and higher lows. Okay, we are inside of a range. This could be a possible bull flag. All right, measured move. All right, bull flag. I'm sorry, bear with me as I navigate the screen. All right, Bull flag, measure, move. All right. Here's your pole, there's your flag, and there's your measure, move. This leg, all right, is mimicked by this leg, and it creates the same leg, okay? You don't always get that move, but if we get a break of this right here, if we get a break of this 63.97, which is the algo push, we can continue to the upside to hit 565 and 567, okay? But right now, that's not what we're getting. Always have a game plan and scenarios for both sides so that you're able to execute flawlessly, all right? So again, we want to make sure that we find balance in the market, okay? And right now we have gaps, okay? You see the illustration? There's a gap in between here, just like here, okay? All right, remember I said that I wanted price to fall to the yellow line here, okay? We're almost there. We kind of bouncing a little bit. This right here is a gap. Doesn't this, look, my example, remember this example right here, right? You have a wick here, but this candle is just a lot of action, right? Look right here. All right, look right. These candles right here. Watch my cursor. 1, 2, 3. All right. There's the gap in between. See the wick? See that wick? And that big candle in between? There's no buyers and sellers. That's a gap. It just happened here. See right here? Wick, big body in between, space. All right. We came to fill that gap. We filled that gap, right? And then we rejected. This was a gap fill reversal. If it would have went above, it would be a gap fill and go, but it reversed. All right, write that down. Gap fill, reverse, gap fill, and go. All right, study that. All right, right now, I told you that we could either bounce off to the 21 or we could fall. All right, now I am on the 15-minute time frame. Let's check the TLT market to see what it's doing on the 15-minute time frame. All right, and to get a more quicker move, if you want to make quicker money, you got to use the smaller time frames. All right, the TLT market is not the only market eternal. There's a VIX, there's HYG, there's the tick chart, there's the ADD line, the advance to decline line. They all are market eternals, and I talk about this in my book. It will be in your best interest to check out my book. The link will be in the description again, and I talk about this in my chapters. But just to give you a brief description, like the VIX is where people buy puts and calls in the market, and it lets you know the fear. It's a fear index, right? And so the VIX is the market eternal, just like this, right? When it goes up, SPY goes down. And when it goes down, SPY goes up. I actually like the TLT market because it serves to me as a better eternal throughout the day, throughout the weeks and months, all right? So let's go to the 3-minute time frame, all right? Okay. My quick analysis is if we get above this number here, okay, 21, 90.71, if we get above that, SPY is going to flush. If we continue to reject this 90 bucks, all right, we're going to continue to the downside. If we break below here, all right, let me squeeze up my charts. SPY is going to rally if we break below this parallel channel here. Squeeze in the chart so you guys can see, okay. All right, if we break this parallel channel, SPY will rally. Remember this message in this video, 2:32 p.m. Tell your friends about me. If they want to learn how to trade, I am probably one of the best guys to do it. All right, I've been doing this 8+ years. If we break above, SPY is going to fall. And if we break below, SPY is going to go up. All right. All right, now we have consolidation. All right, here's a quick tip. Most of the time on days like this, the best moves happen between 9:30 and 10:30, 9:30, 11, 11:30, right? First 2 hours of the market. And then the next best action, price action, where it gives you follow through is between, let's say like right now, 2:30, 3 o'clock, 3 to 4, which we call power hour. The market opens up, the NYSE, New York Stock Exchange opens up at 9:30 and it closes at 4 p.m. All right. So usually towards the end of the day, you get the end of the day close, right? They call it trade to close. All right. And so that's why you get chopped, all right? Because big players understand this and they're not just chasing choppy moves. They're waiting for the more high probability setups, okay? It's inevitable, all right? I think it's inevitable for price to go exactly where it wants to go. And when you've been watching this game for a long time, for a lot of years, people think that it's luck when you make $1,000 in 20 minutes. It's not luck. It's years of experience. It's being disciplined, readjusting, refining your plan, watching for mistakes, learning from your mistakes, okay? Being a great loser is some of the best advice for now I could give you. All right, so 3-minute chart. We are predicting. Let's look at SPY. SPY. All right. Right now, Let's go to the 3-minute time frame. Remember that the bond market on the 3-minute time frame is consolidating, right? We are still holding above this yellow line that I put here, right? This yellow line represents the 15-minute 21 SMA. It's another trick. You could put horizontal lines on higher time frames and come down to the smaller time frames to refine and define your entries and exits. Because now I'm on a 3-minute time frame, but I can still see the yellow line that I put on the 15-minute time frame, all right? And that's letting me know something, okay? All right, now what do we have here? I'm going to wrap this video up soon. Just wanted to give you guys some good game, come talk to you. I usually do updates and, precise guidance on what I think would happen on SPY and other tickers that are requested in Discord. Today I wanted to do some live commentary while it's happening, and I'm going to do more videos like this because I think it's efficient enough to let you know the mind of a trader and what am I thinking about, right? So if we get it below this yellow line, right now I don't want to do anything. I don't have to trade, all right? I want to wait for clear direction, all right? Like simple things, like right here, right? All right, this little down movement was broke. We push to the upside. There's your gamma squeeze right above the 21. There's my call entry, okay? And we can create another one, right here. Simple line break. We'll call these simple line breaks, all right? Price breaks above here. I'm bullish. I want to take calls back up to the resistance level, all right? I define my risk. My risk is here. I want to stop out of this at 562, take a 50-60 cent loss if that's what I want to do, and my risk is going to be to the upside to take more of $1, all right? So my risk to reward is better, all right? But right now I want to do nothing but wait for confirmation, all right? We have lower highs being created, okay? So there is a possibility that we could fall back down, all right, to retest 561.55, all right? And it will take time, maybe the next 15 to 30 minutes for price action to really show you what it wants to do. Ironically, around power hour at 3 o'clock, meaning we have 1 hour left in the market. Remember, 3:30 p.m. will be a commitment of traders report released, and at 3:50 there will be market imbalances. Why is that ironically? It probably is because people are reading the data that I'm telling you about, and it gives them time to readjust, which creates market imbalances, right? Market imbalances have to be corrected to a balanced market, okay? Here we go, 3-minute time frame. What is the market trying to do? Bears versus bulls, all right? Are we breaking above the green line like I spoke before? Are we finding support right here that we said on the 15-minute time frame? What is the TLT market doing? All right, still rejecting up under there. Okay, let's go back to SPY. All right, let's be patient. Let's be patient for the 15-minute close. All right, go back to the 15. All right, the 15-minute. All right, remember we put this yellow line here. Got your gaps, didn't get filled yet, right? Still making support here. Okay, still making support, and we bounce off of that. All right, let's go back to the 3-minute. What do we have? Oh man, we are above the 21. Look at that. Remember I said to buy calls here? All right, your risk goes below here. See that? All right, in less than 4 minutes. Okay, this is precision trading and momentum. All right, this is confidence. This is years of experience, years of knowledge. Okay, and since I'm on this live with you guys, no, I didn't take this call, but I'm already in call swings. All right, I have sufficient time on my contract. All right, and I also bought a put that expires next week because I'm a good loser. I like to play both sides and let one of the one that's not doing good and let the other one ride. Now that's more of an advanced strategy, all right? But if you notice, I literally just told you what would happen if it break this line and what we would do, okay? And right now that is what we are doing. And let's check the TLT. Remember, when that goes down, the market goes up, SPY, and the opposite. And we have rejection, all right? We wicked, all right? But not so quick, all right? Because we can easily pop back up and the market can easily fade to fill gaps, all right? Can you see the gap on the TLT to the upside? I can, but right now we are rejecting, okay? And the SPY is getting a little bit of momentum to the upside. Hey man, if you find this video invaluable, valuable, whatever the two, if you found it informative, if you like what you see, please hit that like button, all right? Hit that like and subscribe to the channel, all right, for valuable videos. Hit that bell notification. I make videos like this all the time, okay? And I wanted you to see the accuracy of the live commentary and what you get trading with me. You can trade alongside with me. You know, market structure and price action is what we do, all right? And so I don't want to hold you guys too much longer. There are some things that I want to show you, but I wanted to keep this video short and sweet. Okay, the next time you see me, I'll go deeper into the CLT report. I actually let you see some of the live data, all right? I'm not the only one talking about the CLT report, all right? But there are not too many that are going to go into detail and that understand it, all right? I myself, I didn't use it in the beginning until I learned about it. But once I learned about market eternals and I learned about levels, it's always about your risk to reward. You stay in the game by learning risk to reward. You want to keep your losses small, okay, that you can stay in the game the next day, all right? This is the best advice that I could give you, all right? Something that you could go home with, something solid, all right? The CLT report allows you to not even look at the chart. You don't have to look at this chart and make any decisions. You can kind of look at the information, the data that tells you where big buys and sells are. That creates the patterns on the chart, all right? And we have some follow through here on a 3-minute time frame. All right. I want to say something important. Let's say we got into this call here. We bought the market. All right. We're in profit. All right. Something I do is OCOs. One cancels the order. I like to do advanced orders. So I would enter into this trade, and as my profit goes up, I like to move my stop to lock in profits, because at any moment it could drop. And so I want to lock in profits. Okay. Because the price could drop at any moment. Okay. Price could drop at any moment. You have some rejection here, right? We on a 3-minute time frame, and it's 2:41. That means we have 2 more minutes, all right, for this candle to close. So you just wait. Sometimes when you get into a good trade, it doesn't mean it's going to automatically go up really fast. The power of patience, mastering emotions in trading while turning discipline into income. You understand? This took time, all right? We're on the 3-minute time frame. There's my call trigger above my 21 EMA that I explained to you. When it's above, I like to buy the market. When it's below, I like to sell the market. All right, and if this is a 3-minute time frame, that means that it took 3 minutes for each of these candles to fill. Let's count together. 3, 6, 9, 12, 15, 18. You could have stayed in this trade about 15 minutes and made money and got out. Right now is another one, right? 3, 6. For 6 minutes, you've been making money. All right. And so we rejected here. I always want to say there's some sellers here we could reject here. But if we knock them out, price continues and we get a gamma squeeze. Bye-bye. All right. That's where their stop was at. Their stop is here. All right. See the rejection from that red line we put up there? Okay. Let's look at the TLT market. What is that doing? Continuing to fall. All right. If it gets oversold, it's going to bounce. But if not, there's a lot of pressure to the downside. And SPY is doing what? Continue to push. 369. So for 9 minutes, we've been going up. All right. As profit go up, I want to move my stop to lock in profit. Doesn't matter what it does. And I would have got stopped out if I put my stop there. See that? Out of the trade we go. Okay. And that's what the market would do to you. Okay. I'm above that line. I've already made a little bit of money. Okay. All right. Hey guys, I really hope that you enjoyed this video thus far. Remember again to hit the like button and subscribe to the channel, all right, so you can be notified on when I drop valuable videos. Okay, today I've talked about gaps in the market. Okay, we have about 1 hour and 45 minutes left in the market. I also talked about market structure. Okay, I talked about market eternals, the TLT bond market, and the SPY. I talked about quadruple witching. I talked about the CLT report and market imbalances. This is a very valuable video. I suggest you rewind it, play it back, and again, if you have any questions, just ask below. Check out my links below so that you can join a thriving community, the Unique Trading Group. All right, that's what we are, the Unique Trading Group, because the market is very much unique. All right, share this with your friends and family if you found it valuable. And until the next time, guys, peace.